Oh my God, the Indian market fell 4,000 points, right? 4,000 points on the Sensex and I think 1550 points on the Nifty, which both translate to about a 5% fall in the market. So don't try to look for the reasons why the market has fallen. One is of course the broader reason that of the Trump tariffs. Internationally, all markets have spooked, all markets have fallen. So there is very little chance that the Indian market won't fall. So the Indian market has fallen, that's fair enough. The crash seems to be part of the broader thing. If you are looking for more details, what it means for the future, honestly, this is not a time to be asking that question. Also remember, two things happen. When there's a 5% fall in the market, maybe first there was a 3% fall because of international reasons. Then what happens is the brokers start selling margin shares. Now, if I have bought shares worth 2 crores, I must have kept some 4 crores worth of shares. Let us say I had kept Tata Motors shares worth 4 crores. And he calls me up and says, please put in the margin. I want a 50% margin. So if you have mark-to-market losses of 50 lakhs, please put another 1 crore. So I don't have 1 crore. What does he do? He is unemotional about it. He does not think whether Tata Motors is a good buy, bad buy, good sell. Should you keep it for permanently? He is not bothered. He uses it as a margin. So he will sell. So first of all, the initial market fall could be because of international triggers. After that, there could be local triggers. We do not know out of the 5% fall whether 3% was market fall and then 2% was because of sale of margin shares. It can't be so high because the very few people very few people invest with margin money, but people do. And all those traders give good quality shares as security because the fall in the security value should not be too high. So the best shares, maybe the TCS, Tata Motors and HDFC, Reliance, those are the shares which are given as a collateral to get an overdraft from a broker or from a banker. So suddenly the banker and broker are selling shares, so that could have triggered the last 0.5% or 1%. So these things keep happening in the market, and we are all used to seeing fall in market prices like this, right? So do you have to react to it? I don't think you have to react to it. So I've made another video saying, first, don't panic sell, don't be emotional, don't say, oh my God, now the world is coming to an end. The world is not coming to an end, nothing happens. March 2020, I've made videos. March 2020, I'm on record with Zee TV. I put it on Twitter some time back, and I said exactly the same thing. The market is not going to come to an end. The heaven is not falling. It's not going to fall on your head. So don't worry, don't do panic. If you do panic selling, you lock in your losses. If you don't do panic selling, you hold on, and maybe after 3 months, 3 weeks, 3 days, 3 months, 3 weeks, 3 fortnights, whatever, the market could recover, and this could look like a temporary dip. Now, if you have a 20-30 year horizon, this is bound to be a dip. But if you're a trader and you have a shorter horizon, then obviously you don't have the capacity to hold on to the share. So you have margin calls coming, so you will have to sell, right? So 5% fall is just global fears, or rather I said a combination of global fears, domestic fears, domestic market selling, the FII selling in India to invest in US. All these things are going to happen. So the fall in large cap is likely to be less than the fall in small cap, which means if you have money on the sideline, maybe it is time for you to put some money in small cap. I am not advising anything like that because I think the recovery in large cap will be faster. So it's possible that you put money in large cap and then the market recovers and then you sell that large cap and then you put money in small cap. All these strategies can work, right? Assess your portfolio to see whether you're heavily exposed to mid or small cap, then maybe you should do some rebalancing and you need some large caps also. I don't think in my own portfolio, I don't look at buying it, oh my God, I must buy large cap or I must buy small cap. No, I do a completely bottom up approach. So I pick up shares and after some time I find that I have more large caps than small caps simply because your TCS or HDFC Bank or Reliance moved up in value or moved down in value. So therefore I have a huge small cap exposure. So all these things can happen, mid cap, small cap, all these things can happen. So don't worry too much about it. But yes, if you're buying just because the market has fallen and you are buying it for recovery, you're just playing this fall, then large cap is a better bet than small cap, right? One good line which I heard from a friend is to say, if you are a long-term investor, this is a blip, it's not a funeral. So don't sit and worry and cry and say what is going to happen. We don't know. The GDP is growing. Indian markets are definitely not doing too badly. Yes, so you don't have to be too much worried. But yes, the market did fall 4,000 points, drop exceeding 5%, and it's going to hurt you. There is no doubt about that it is going to hurt you. Global sell-off, whatever you want to call it, right? So you concentrate. Let me tell you what all I do. Yes, I do buy dips, buy it smartly, buy it wrongly. I buy, then the recovery takes time. But I have tons of patience. I know I've got 2-3 years view on the market. So first of all, like I said, stay calm. Let me summarize. Stay calm. Don't do panic selling, because when you do panic selling, you lock in the losses, which you don't need to. You don't need money in the short run. You need money only after 3 months, 6 months, 8 months, 5 years, whatever. If you need money in the next 3 months, then maybe it's not a bad time to be selling something. If you've got no debt, funds to dip your hand into. Keep reviewing your portfolio. This is true whether the market goes up 20% or 30%, because some junk gets into all our portfolios, and sometimes you need to revalue and say, okay, I bought this share, this looked very good in the bull market, in the bear market it will look terrible, so let me sell it off, right? So that is also possible. So reviewing your portfolio, looking at some shit we all buy, because all said and done, there is always the temptation that we should buy something. Buying the dip smartly. If you think that you have done research on a company which is doing very well, you bought it at 350 rupees and now it is say 650 rupees. It's still doing well, not fallen at all. Yes, it has fallen from 780 where it had gone to 680. It has fallen. It looks like bad news, but you and your research persons are sure that it's a good buy. Maybe you buy that on dips, but you don't buy bad companies on dips. Buy good companies on dips. You bought it at 300, your target was 1000. In 1 year it has gone to 680 after, or maybe 650 after falling from 780. It's a good opportunity to buy, because your target of 1000 is still intact, right? You're not changing the EPS, you're not changing the PE. In fact, if you change the PE, the price may be 1200. So that's a great time to be buying. I bought one such share. It's an auto component. Obviously, I'm not at liberty to name it. You can also focus on quality and dividend. So one portion of my portfolio which has shares like Colgate, etc., Colgate and Siemens, etc., which looks very good on dividend, right? Not on dividend yield at current prices, but looks good on dividend. So concentrate on that. Sorry. One thing which I do in my equity portfolio is I look at the dividend, and I know that my dividend does not fluctuate as much as the core value of the stock. So once that is true, then focus on quality, focus on dividends, focus on the HULs, Colgates, maybe Siemens, right? So then keep watching the triggers. What could make the market bounce back? See, COVID, we had to look for a vaccine had to be made, vaccine had to be made available to the whole world. With all those uncertainties, market went up. Here it is a man-made thing, and that this man could just with a wave of the wand say, oh, I don't think the market was ready for this kind of tariff, so I'm rolling it back. Perfectly possible. Or the market learning to say, okay, this is the US market, it comes at this particular price. But it is good, because in the US market, I was not very sure whether I would recover my money if somebody didn't pay. So let me just get out of the US market. No, that does not happen. But I met pharma companies which say US market is very difficult to enter. And even after you enter, there's a lot of competition. Whereas the Japanese, Chinese and some South American markets, it's very difficult to enter. But once you enter, you can get reasonably good prices, because there's nobody else wanting to come into those markets, right? So be clear about what you are. Are you a long-term investor? Are you clear that you have patience to sit through tough times? Or are you somewhere in between? Then check out wherever you have some profits made, maybe you sell that off, right? So don't look for exact strategies in my video. I'll just tell you, like, look, I'm doing everything. I've sold some shares, I've bought some shares, I have invested in some mutual funds. I've done all of this during this last 1 week when the market was so bad, and it's only today that it has fallen by 4,000 points. But I was pretty ready for it. I had sold some things. Some of those things I may buy it back. Some of those things I will wait for the market to correct further. So there's no one single strategy of one person which will work for you. You have to create your own strategy, and my strategy for mutual funds is different than for my direct equity. I will not touch my SIPs. That I'm very clear about. But in equities, I may stop buying, I may sell off. I generally don't do short sell, but any of those things are possible. So create your own strategy. Don't come to my comment column and say, "Kabhi to bol do kya kharidna chahiye." If you don't know what to buy the index, and obviously you will buy, when you're buying the index, buy the large Sensex, right? Thank you.